Welcome to AI ConvoCast, where we bring you the latest in AI and tech innovation. Quick housekeeping. Check out the affiliate links in our description. Using them supports the show, and please don't forget to rate, review, and share if you like what you hear. Let's jump right in. Today we will be discussing OpenAI's major restructuring and new Microsoft partnership, Amazon's massive AI supercomputer launch called Project Rainier, and Meta's Q3 earnings report, which shows strong revenue despite a significant tax hit. OpenAI has completed a major corporate restructuring that fundamentally changes its relationship with Microsoft while securing its future computing needs. The company has officially converted to a public benefit corporation, with the nonprofit OpenAI Foundation retaining control and equity valued at approximately $130 billion. Microsoft now holds around 27% of OpenAI, worth roughly $135 billion. This new agreement extends Microsoft's intellectual property rights to 2032 and adds an independent panel that will validate any future AGI declaration. One of the most significant aspects of the deal is OpenAI's commitment to spend an additional $250 billion on Microsoft's Azure cloud services. The restructuring represents a careful balance of maintaining OpenAI's mission while cementing its most important corporate relationship. Under the new governance model, the nonprofit maintains control, but OpenAI gains the ability to work with some third parties, potentially expanding its partnerships beyond Microsoft. However, Azure API exclusivity remains for certain products. Microsoft's official statement noted, "We've signed a new definitive agreement that strengthens our partnership." This restructuring effectively resolves the governance questions that have surrounded OpenAI since the boardroom drama of late 2023, creating a more stable foundation for the company's ambitious AI development roadmap. Moving to our second story, Amazon Web Services has unveiled Project Rainier, a massive distributed AI cluster equipped with approximately 500,000 Trainium2 chips. AWS describes this as their largest AI system ever constructed. Even more impressive, Anthropic, the creator of Claude AI assistants, has announced plans to scale to over 1 million Trainium2 chips on AWS by the end of the year. This major infrastructure investment aims to provide faster, lower-cost training for Anthropic's Claude models. According to Anthropic, the Rainier system offers hundreds of exaflops, 5 times our prior cluster, enabling next-generation scaling of their AI models. Tom Brown, Chief Compute Officer at Anthropic, stated that Project Rainier will boost our research and next-generation scaling. The move represents a significant shift in the AI hardware landscape, as it signals aggressive non-NVIDIA scaling paths becoming viable alternatives for major AI companies. This partnership highlights Amazon's determination to compete with Microsoft and Google in providing the infrastructure backbone for leading AI companies. By offering Anthropic access to its custom silicon, Amazon positions itself as a critical player in the AI compute arms race, while Anthropic gains a potentially more cost-effective training solution than traditional GPU-based approaches. Our third story focuses on Meta's third-quarter earnings report, which shows record revenue despite a significant tax hit. Meta reported revenue of $51.24 billion, up 26% year-over-year, demonstrating the company's continued growth. However, earnings per share came in at $1.05 after a $15.93 billion non-cash tax charge. Without this charge, the adjusted earnings per share would have been $7.25. What's particularly noteworthy is Meta's aggressive investment in AI infrastructure. The company has set its 2025 capital expenditure between $72 billion and expects materially higher capex and expenses in 2026 for AI infrastructure and talent acquisition. For the upcoming quarter, Meta provided guidance of $59 billion in revenue, with plans for continued AI data center construction and incremental cloud spending. Meta's investor relations team emphasized, "We expect to invest aggressively to meet our compute needs." These results showcase the dual reality facing major tech companies investing in AI. On one hand, Meta's core advertising business continues to thrive, with AI-powered ad targeting contributing to revenue growth. On the other hand, the massive capital expenditure required to build and maintain competitive AI infrastructure is creating significant financial pressures. The company's willingness to increase spending on AI despite the substantial tax hit demonstrates its belief that artificial intelligence remains critical to its long-term strategy across Facebook, Instagram, WhatsApp, and its Reality Labs division. The market will be watching closely to see if these investments translate into meaningful product improvements and revenue growth in the coming years. The scale of Meta's AI investments also highlights the increasing barrier to entry in advanced AI development, as few companies can match the billions in capital expenditure needed to compete at the highest level of artificial intelligence research and deployment. Thank you for listening to AI Convo Cast. Please don't forget to rate, review, and share if you like what you hear. Thanks and hope to see you again next time.